Hey guys, Akil here, and I want to share with you a discussion we had in my live trading room this morning talking about how to evolve as a trader. The markets have been very uninteresting, at least to me personally, as of late, so we've had a lot more time to really get on some good rants and have some good training lessons on different aspects of trading. And today's one was a trader asking about the future and just the next steps that he can take as he continues along his trading journey. And well, it was a very good conversation and I want to share it with you guys. Now, before we get into it, I just want to update you guys a little bit. I've been getting about 25 emails or messages each and every day saying, Akil, I want to get involved with you. Let me know what's next. I don't want to be left out, and just relax just a little bit. As you guys know, this is my final year working with Trade Empowered. I will continue to coach. I will continue to teach in 2018. You're just gonna have to wait a little bit longer to hear about it. But I promise, if you're involved anyway here on YouTube and you watch every video or on any other forms of social media, you will not miss the big announcement when I make it. But just hold on a little bit more. After all, we are traders, so good things come to those who wait. You should be practicing your patience anyway, but I promise you guys will not be left out. So anyway, here's today's video. I hope you guys enjoy, and until next time, plan your trade, trade your plan. Take care. Right, and matter of fact, I'm going to change my answer. So the question again was, I'm currently trading patterns only. Do you recommend practicing the normal top-down analysis that we do if I'm only trading patterns? And my initial answer was no, because at least the way I teach pattern formations, right? I teach it as a strategy. So whether the market is bullish and the pattern is bearish, whether the market is bearish and the pattern is bullish, I teach to take the pattern, right? A valid pattern formation is a valid pattern formation. You take every single one of them. And when going in with that mindset, you guys can see why you don't necessarily need to know what the underlying trend is. However, I'm also assuming that all of you guys eventually want to take your trading to the next level. Is that true? Is anyone content with how they're trading and no one wants to become better? If you are, I'd stop right now, because if you're not adjusting with the market's going to eat you for lunch. But say you're going to be a pattern trader only, which is fine. There's nothing wrong. Again, you can have a very profitable trading career trading a single strategy on a single pair, on a single time frame, right? 1-1-1. However, what those traders do is they maximize their efficiency on that singular strategy. So because they're only trading one strategy, right? They don't have to worry about looking and finding and doing all this other analysis. They're locked into something very, very simple. And with all the free time you have, because you're going to have a lot of free time in trading if you haven't noticed already, they use that to kind of maximize their strategy. So if you're trading pattern formations, one of the things that you want to do is you want to maximize stops and targets, right? Maximum favorable excursion, maximum adverse excursion. For you guys that have been in the strategy lab, we've talked about that a few times, but maximum favorable excursion is essentially how much profit you can make before it comes to bite you in the butt. Does that make sense? Yeah, imagine I use the robber stealing money out of a jewelry store. How much jewelry can I steal before I waste too much time and the cops catch me? Right? You want to find that line of where you can get as much as you can, but without having the danger. And one of the things that's going to help you do that is using pattern formations as entries in trend continuation trades. So I call it shooting for extended targets. So if you can become good at the skill of analyzing a price chart and determining the underlying trend and making predictions in what the market is likely to do next and where the market is likely to go to, when you have opportunities where your pattern formation falls in line with that underlying analysis, it's going to provide you with the opportunity to maximize your profit. Right? So a good example is this, right? let's say we're in a bullish trend here, right? Bullish trend, bullish trend, bullish trend. We've broken past all types of support, right? And we do something like this, right? We come back up and then we start to put in, this is going to work perfect because this is going to be kind of your Elliott wave type deal here. You start to put in kind of a complex pullback here, right? Something like this. You guys all familiar with complex pullbacks, basically an ABCD pattern. If you're an Elliott wave person, you got your 1, 2, 3 ABCD. So it's really a 5 wave count, but your 3 extensions, 1, 2, 3, and then your complex pullback, right? This is kind of your relief before the trend continues, right? So what if this complex pullback also forms a bat pattern, right? Now, traditionally, you're taking targets somewhere around that B leg, right? So you're doing something like this. You're getting involved right here. You're taking your target 1. Let's assume you're a 2 target taker. You're a 2 target taken trader. Look at that. How about that for alliteration, right? Target 1 right there. And you're taking target 2, let's just say right up here, right? Not bad for a day's work, right? Mike's doing good. Took his pattern formation, identified it well, made some money off of it. However, right, what if you are a trader that has grown his skill, his or her skill of reading a price chart? You're good with the IPDE process, identify, predict, decide, execute. You see this beauty of a pattern formation. You say, this is a great looking bat formation. However, this also comes after a complex pullback. So the ABCD move, right, in your Elliott wave or in your trend. And based on that knowledge, right, your prediction is that price should extend and continue higher and start the next extension and the next wave in a trending market. So what if that knowledge allows you to do something like this, right? Instead of taking target 2s right here, you draw out, for example, Fibonacci, right? Take a 127. You say, no, I'm going to shoot for a 127. Boom. What did you just do to your secondary target potential? Was it right here? You just about doubled it on the same damn trade, right? You did you do anything different? No. Same situation. Just you're more skilled in reading a price chart. You're more skilled in analyzing the market. And that skill allowed you to maximize this trade. It's no different from an athlete, right? I was a baseball player until my vision went. Then I wasn't a baseball player. But in baseball, right, we're taught to read the pitcher's pitch as it leaves his hand. Right? I don't know how many guys follow baseball, but when the ball leaves the pitcher's hand, our job is to identify what type of pitch is it. Is it going to be a fastball? Is it going to be a breaking ball? Right? Now, for someone with no knowledge of that, they can still have a very good career, right? Good hand-eye coordination. They can see the ball coming in. They can take a swing. They can hit it, all the fun stuff. However, for someone that has taken their skill to the next level, for someone that can identify what type of pitch it is when it leaves the pitcher's hand, they have a better opportunity of knowing where that pitch is going, how fast that pitch is coming. And do you think that hurts or helps their chances of being more efficient at the plate? That's a real question, guys. I want you to answer it. Feel free to type it in. Yeah, there you go. It helps them, right? If you know a big, juicy fastball's coming, you can unload on that bad boy. Same thing with trading. So yeah, so I do think the skill is good no matter what. And then the other part of that, this is going to seem boring, a letdown after we just went over this whole question. But the other part of that is, yeah, I think working on the skill anyway, even if you, most of the traders I work with, this is their kind of their process, right? They start with advanced pattern formations because it's very rule based. It's strict. It's black and white. It really puts them in a position where it's very hard for them to make mistakes, right? I think you guys would agree. If we have a system where it's like, if this, then that, if this, then that, if this, then that, Daniel can't make a mistake because Daniel's like, well, Keel, is this a valid B leg? Well, Daniel, what do your rules say? Well, my rules say if it touches the 50%, it is, but if it touches this, it isn't. Well, what did it do on the chart, Daniel? Did it touch the 50%? Yeah, it did, Keel. Well, there you go, Daniel. Right? I'm sorry, but it's true, right? When you have something rule-based, it's hard to fight it, right? There's no subjectivity to it. It's not like, I know there are some traders that have, I think the traditional rules for advanced pattern formations is it has this close enough buffer zone, right? Which you could define close enough as well. But let's say Mike's rules say close enough. Well, if it is 2 pips close enough, 3 pips, 4 pips over, 4 pips under, right? There's that subjectivity in there. And then you start kind of going back to the point we did earlier. You start doing whatever your mind wants to do. I really want to be involved in this trade. So this time 10 pips is close enough. Yeah. Oh, I don't really want to be short the euro. So although it came 2 pips, close enough would really be 1 pip. So I'm gonna stay out of it. Right? And we're inconsistent. When we're inconsistent with our execution, we're inconsistent with our results. But what most traders do is they go from this very strict style of trading, and this is what I was talking to Dale about. We go from this very strict style of trading, and then as they get better in the market, they kind of go backwards. They go to more of the simple stuff. Now it's simple because it's simple pattern formations, right? Simple pullback trades, simple structured trades, but it's more subjective, right? Because you actually have to do your analysis on the chart with rules that aren't always as black and white, just because, I mean, it's a price chart, guys. You know, these things are a lot different when you see examples in a book or when you see examples in a YouTube video than when you see them in real life. But as you get more experience in the market, you get better at the skill of reading a price chart. You get much better at deciphering opportunities. So if you do plan on doing that, there's nothing wrong with getting a jump start on learning how to read the markets. You may not use it. You may not use that IPDE process right away. It may be 2 years down the road, but you've been working on the skill in the background. And so when it's time for you to kind of transition to a different style, when you start working on a different style, you already have that built up in the bank for you. You guys follow me? That was a damn good session, wasn't it? That was pretty good.